If you could only pick one thing to invest in, what would it be? And is investing in one fund really enough? For many people, actually yes, it can be, and there are several really nice benefits you get from doing this. So let's go over when it's a good idea and when it's not, things you would want to consider when picking that one fund, and then I'll show you 6 funds that could all work for this. And then I'll tell you how I would go about choosing the best one, because this is going to be different depending on your situation. So why might you pick just one fund? Well, firstly, it's really easy maintenance. You don't need to monitor any individual companies or even full market sectors. You just need to buy it and leave it there. And it's completely on autopilot. You don't have to annually rebalance, so that's all taken care of for you. And it's really cost efficient because typically your fund choice is going to be a global low-cost index fund. It's true that in some cases you could save some money by buying multiple funds or by buying individual stocks, but both of those options would take some work to set up or maintain. And that's the main appeal of a one-fund portfolio. It's completely hands-off for you. But is it actually a good idea? This strategy is going to be better for growth-focused investors. And that means people who want a lot of stocks as opposed to bonds are fairly early on in their investing career, so they've got decades ahead of them. Because most of these funds are pure equity funds, there's only one option I'm going to show you which actually includes bonds. And so if you did want bonds as well, you would have to either pick that one option or maintain some bonds separately in addition to this one fund. And finally, there's no flexibility, so you don't get to choose what to invest in or make any decisions. But as you're watching a video about single fund portfolios, I'm going to assume that not having to make decisions about your investments might actually be a good thing. So for most people, yes, a single fund portfolio can be a really good choice. So if you're going to do all of your investing in just one fund, you need to make sure it's a good one. You can't just pick any old fund. So I'm going to put some rules in place that apply to all the funds that I've picked. Firstly, I want to make sure it's truly global. So some index funds are labelled world, but this does not actually mean they're truly global. It's a bit sneaky because what it actually means is that they just include the developed world and miss out emerging markets like China and India, which you definitely want to include because the goal is to invest in as much of the global economy as possible. So we're going to be looking for all world or global index funds and make sure they include emerging markets as well. Secondly, I'm going to be looking at fund size. So I want a large fund with a good track record. So I'm going to be requiring at least £100 million in assets under management and at least a 3-year track record. Longer is better, but we want at least 3 years, so we have some data to look at and we can see how the fund has been performing, both compared to its own index and against the other funds on the list. As an example of a fund I'm not going to include in this list for this reason, this Invesco FTSE All World ETF actually looks fairly nice. It tracks an all-world index, it's cheap, actually cheaper than some of the options on my list. But because it's so new, it just doesn't have the track record there for me to put all of my confidence in if I was picking my only investment at this point. We also want as many stocks included in the fund as possible, because this means better diversification, and the more stocks the index fund has, then the better job it's going to do of representing the global stock market. And finally, I'm going to be considering cost. So as long as all of these other criteria are met, then we want to take the cheapest fund possible, and this will mean that we can maximize our gains over the long term by paying lower fees to the fund. Alright, so here are 6 funds that you could use as a single fund portfolio. First up is the HSBC FTSE All World Index Fund. It's an index fund, as is in the name. It costs 0.13% per year, which is actually the cheapest fund we're going to look at, and it tracks the FTSE All World Index. Next is the SPDR MSCI ACWI IMI ETF, which is a bit of a mouthful, but as you can see, it's an ETF, costs 0.17% per year, and one nice thing about this fund is that it does include some small cap, which the HSBC fund doesn't. That only has large and mid cap stocks. Next is the iShares MSCI ACWI ETF. This doesn't include small caps, but is otherwise fairly similar to the previous ETF, and it has an ongoing charge of 0.2% per year. And then we have the Vanguard FTSE All World ETF. It's another ETF, and it costs 0.22% per year. Then there's the Vanguard FTSE Global All Cap Index Fund, which is the only index fund on the list to include small cap. This is the largest fund on the list by a long way, but it's also the most expensive at 0.23%. We'll look at whether including small cap stocks actually makes much difference in a second. And the final fund I want to mention is the Vanguard Life Strategy 100% Equity Fund. It's actually not just one fund, it's multiple funds combined. But the nice thing about this one is that the Vanguard Life Strategy funds can include bonds as well. So if you wanted to do that, you could pick, for example, the 80% equity fund instead, and that would leave your remaining 20% as bonds. It's on the higher end of the fees at 0.22%, but that's still not too bad. Most importantly, these all meet the criteria that I outlined earlier. And to double check, if we look at this comparison graph, you can see that they all moved very similarly over the past 3 years, which is a good sign, and shows actually that the tiny differences, so things like whether they include small cap or not, whether they're an ETF or an index fund, or even the Life Strategy Fund, which is slightly different in how it invests, none of these things made much difference to the overall performance of the funds. Which is good, because it means there's no clear winner. It doesn't really matter which one you pick. So you can base your choice on other things, which are going to be more unique to your situation. So let's compare the funds next to each other, and I'll show you how I would walk through the list and pick the best one, which is going to be different for different situations. So I've put all of the funds into a spreadsheet so we can compare them next to each other. And then there are several different columns for other things you're going to need to answer for yourself. So let's run through them now. The first question to ask yourself is, do you need to include bonds? Because really, there's only one option for you if that's the case. You're going to have to go with one of the Vanguard Life Strategy funds, and it's not going to be the 100% equity. It's going to be some smaller proportion than that, and you'll need to decide that for yourself. If the answer is no, and you're happy to have a 100% stocks portfolio, then you can move on to the next question. And that is, do you care about having an accumulating or a distributing version of the fund? If you don't know what this means, I'm going to make another video explaining that soon, so I'll link to it when that's ready. And you may not care, in which case you can choose any of the funds, but if you need a distributing version, just know that these two come in accumulating only. There is no distributing version, so you wouldn't be able to go with one of those two. Next, do you care about having small cap exposure? As we showed in the comparison chart, this actually doesn't make very much difference, especially because the small cap percentage in the funds that do include it is relatively small, so usually around 5% or so. You also have the option of buying a separate small cap fund, of course, but if you just don't care and want to keep things as simple as possible, then you could go for any fund. But if you do want small cap included in your single fund portfolio, you'd be limited to one of these three. The other really important question is the fund even available through your broker? So some brokers only have ETFs, or some may charge a high fee for buying one type of fund versus the other. And if that's the case, you need to take that into account when picking your fund. So for example, if I had a broker that was free for dealing ETFs, but charged a high fee for buying index funds, I would probably pick an ETF rather than an index fund. So then how can we filter these out otherwise? I've ordered these by cost for a reason. So the way I would filter this is to start at the top of the list and say, am I happy with the constraints that this fund has? And is it available through my broker? If the answer is yes, then I would go with that fund because it's the cheapest. If not, I would move down to the next one and ask the same questions. And this way, you'll end up with the cheapest fund that is available to you and meets your personal criteria.